Okay traders, welcome back to the channel. Here we have our regular euro dollar and pound dollar weekly forex outlook. So we're going to be going over where I think the markets are likely to go over the next 5 days or so, going into the week 3rd of June. So we've had a few bullish weeks on euro dollar here on the weekly time frame to kick things off. So we've had another weekly bullish candle overall, kind of a doji, but nevertheless we have had a green candle or a white candle in this case. So the way that I see prices, we are yes below that 50% level, therefore we are in a discount. So let's quickly label that on. We're currently in a discount. With the current bullishness we are seeing on the weekly time frame, the last few bullish weeks, the next drawn liquidity is up here. So this drawn liquidity is at 1.127. Let's label that 1.127. And the reason why this is a drawn liquidity is because, like I've explained in one of my previous videos, is that this is a weak structural high. Now, what do we mean by a weak structural high? A weak structural high is simply an area on a chart that hasn't broken the last low. So this high over here pushed down to this low down here. We hadn't seen price break the previous low. Therefore, this is a weak structural high and it's a targeted high. So this becomes an area that has liquidity above it, hence we call it a draw on liquidity. So the next higher time frame draw on liquidity is this point over here, but remember we have weekly POIs over here. Here we have a weekly POI over here and we have a daily POI inside. So what makes this a POI? Very quickly to go over basic rules. Yes, it's left a fair value gap. It's priced in the premium above the 50% level and it's broken structure, right? It broke the low from back in 2017. So this is a premium POI. So to simply answer the question, where do I think euro dollar is going to head? Not necessarily this week, but over the next few weeks and months. This is a longer term perspective. I expect the price to get up to here. And the reason for that is because we have a drawn liquidity and we have a fair value gap in premium, and we're going from discount. So we understand that the interbank price delivery algorithm seeks three things. The first thing it seeks is fair value gaps, which I've marked out in blue. The second thing it seeks is we want to go from discount to premium in this case, or the markets can go from premium back down to this discount if we have a bearish scenario. And the third thing we want to look at is liquidity. Dollar sign for sure. So we have a liquidity pool, we have a premium zone to target, and we have a fair value gap in that premium. So this is what paints us a bullish picture on euro dollar. So if we head down now to the daily time frame, the daily time frame is an interesting one where yes, we have bearish structure. And the reason why we have bearish structure is because we have this bearish dealing range over here. So this is our dealing range, and this dealing range is, of course, as you can see, bearish. And so from here, what we understand, what we see is that price has come into a discount over here in this region. So this is a discounted low that the market has given. Let's label that in yellow. The price action has given us a discounted low. It's filled the majority of this fair value gap over here, and we understand price from here has two targets, right? We understand we have a fair value gap over here, hence why I put the POI over here, the daily POI, and we have trend line liquidity just over here that the markets will look to attack at some point, because we understand, simply put, the markets move up for two reasons. Yes, it goes from a discount up to a premium, but what does it attack? It attacks buy side liquidity and it attacks sell side inefficiency. So this is what makes the overall trade narrative for buys, right? Overall bullishness in the markets, right? The only thing I would advise traders to understand is that we are literally at the equilibrium. We're at the 50%. What does that mean? price action can be choppy near the EQ. I mean, if we look at some price action over here, it's pretty choppy. I mean, look at this region back in January. We were very, very choppy in January. And the reason for that is because we were essentially at the equilibrium. So what's the best thing to understand? The best thing to understand as a sensible analyst and as a trader is that you don't want to burn your account. You don't want to burn your capital inside or near the equilibrium, as this then can become a consolidation. You don't want to burn your account inside of consolidation. Wait a couple of days, wait a week, maybe wait 2 weeks just to have a clear bias. But the bias overall long term is bullish based off the weekly and daily perspectives. So now if we head over to the GBPUSD weekly time frame, I think this time frame, this market is quite clear in its intentions. A little bit clearer than the euro dollar, and here's why. Again, we have our bearish structure. So remember the 4 pillars? Yes, our market structure is bearish, and that gives rise to a bearish dealing range. So the dealing range over here is bearish. This is a bearish dealing range, and we understand that price is coming from a discount. Prices come from a discount, okay? So what we've had over here is we've had 2 demand zones that have been respected, right? So yes, we've left inefficiencies. So how do we read price? Reading price is very important. So yes, we had a push up over here into the premium. Above the 50% level, we're in the premium. Prices come down, tapped off a fair value gap, tapped off a demand zone, has pushed higher into a premium again. Prices retraced off this other demand zone. So now we have a demand zone chain, or a demand chain, which shows us that bullish fair value gaps are being respected. Now, identical to the euro dollar, what we see over here is we see a weak structural high. So this here is a weak structural high. Weak high. And what makes this a weak high is the fact that it's tried to push lower on 2 occasions, but it's failed because the low is all the way down here, the swing low. So what we see over here is we see price giving us a very, very clear sign for bullishness over the next few weeks and months, right? So I expect, I mean, this is a draw on liquidity. That's 1.313, 1.313. So that's the next weekly draw on liquidity. Yes, we have a fair value gap or a PY up here. So ultimately, we could end the year bullish, right, with this kind of price action, okay? So if we head down now to the daily time frame, the daily time frame again paints a clearer picture, in my opinion, than the euro dollar daily time frame. So again, yes, we have a bearish structure identical to the euro dollar. We have bearish structure over here. So let's quickly identify our dealing range. This is our bearish dealing range from this high down to this low. Now from here we understand that I believe this was the end of April, so just over a month ago, yes, we've come into a discount. Now, what are things you want to take from here? We had a fair value gap over here. Notice how the majority of this fair value gap has been filled. Not all of it, because we have the POI down here. That's fine, because when the market's intention is bullish, we perhaps won't fill the majority of the fair value gap. This is just something you want to learn from your backtesting. So we've come into the discount, and what we've had is we filled the majority of this fair value gap over here. So I would consider this filled and mitigated. Prices come down into a discount. So now you want to ask yourself, where is the next draw on liquidity? Well, the answer is over here. And the reason why this is a draw on liquidity is quite simply, let's just head back a little bit. Let's look at our dealing range. The dealing range consists of 2 critical points. We have a swing high over here, and we have a swing low down here. Now, you want to ask yourself, as the market pushed lower from this region, okay, so we saw price head down, and we saw price give us a premium retracement. Now, this high, what's it actually achieved? Yes, it's come down into a discount. But you want to ask yourself, is it a strong or a weak structure? You can pause the video right now and ask yourself, is it a strong or a weak structure? So if you have come back to the video, welcome back. this is a weak structural high, and the reason why is because this is the last low, and this low over here is obviously higher than this low, meaning this high has not broken the last low. Therefore, it is a weak structural high, just like the weekly time frame over here. This is a weak high. This is now a weak structural high. So the next daily draw on liquidity, not the weekly, but the next daily draw on liquidity is at 1.2895 or 1.29, let's say. 1.29 is the next daily draw on liquidity on GBPUSD. But ultimately, I expect price to break through this level and get up to this POI. And this POI, we understand, is at levels 1.305. 1.305, okay? So the main thing you want to understand or take from this video is you want to understand which fair value gaps have been filled, which fair value gaps have not been filled. Where are the liquidity pools? Where has price come from? So we understand price has come from a discount, right? This is a discounted low. Price has come from a discount. So again, what we see over here is we see a discounted low. So from here, this then becomes an overall bias or an overall narrative, right? And what makes this a narrative is that we have a drawn liquidity over here. This is a doll, a drawn liquidity. We have a fair value gap over here, and we have a weak high over here. So when we have a drawn liquidity and a fair value gap, it's pretty easy to determine a bias, okay? So if you like this video, give it a like and thumbs up, and I look forward to seeing all of you in the next one.